Dan, we know you've been waiting for an environment like this. I imagine this is exactly what you had thought was coming. And I'm going to guess that you think it's not done by any means.
Well, unless you think inflation is done, and unless you think the Fed is done, it's hard to imagine that this is done. Because you've had, if you look at the dividends included, the S&P is up 100% over 3 years. It's up 47% since the beginning of a global pandemic. And so my belief is that's driven by, 5 stimulus packages in the U.S., over $5 trillion in that. And then you have the Fed expanding the balance sheet. All of that stuff's reversing this year with multiples at all-time record highs by several different measures. So you have to believe multiples are going to compress unless you think inflation is done and the Fed is done.
Right. Where does that leave you, though, on names, for example, in mega cap tech that have pretty strong business models, lots of cash, corporate capex boom, households with still some money to spend, although maybe draining from excess cash last year, and then the multiple compression that you mentioned? When is a bargain a bargain?
Well, I think it depends on how you look at it. And a name like Facebook or Google, we put out our top 5 picks, I think December 29th or so on your show. And we picked Facebook and Google as ones that could withstand a downturn of 20% in the S&P better than the rest because of everything you just cited. They're trading at multiples that are 1 to 2 points above the S&P. They've got massive cash flow, really good profit margins, really strong growth. And, the multiples are depressed because of all this regulatory risk, et cetera, going on, and the Apple, ad tracking issues, et cetera. So those are good. But we've got almost as many shorts on as we do longs right now. And we're very comfortable with that. And quite honestly, we generally like to have more shorts on than longs, given what we're seeing in the environment. Our best long ideas, though, are in energy and in financials, because that's kind of the flip side of the coin, if you will, because we think oil's going to go a lot higher this year, and we think interest rates are going to go higher. So you want to own energy and banks. And that's the flip side, which will put pressure on names like Google or Facebook.
Dan, good morning. It's Deirdre. When you talk about wanting to have more shorts than longs, I know in the past that you have been short Apple. And I wonder, what do you think is going to be driving that? Are you shorting Apple currently? And what are the differences between how the macro environment might affect Apple versus a Meta and Alphabet?
Well, I mean, if you step back more broadly, what you saw last year was names that benefited from the pandemic, they started to miss. So you had Amazon miss 2 quarters, you had Netflix miss 2 quarters, but both those stocks were up because you had the Fed still expanding their balance sheet by a lot. As you got towards the end of the year, you started to see the misses starting to broaden out, where you saw high growth software starting to miss as well. DocuSign's probably my favorite example of that, where they were supposed to get through this fine, and then they reported and the stock went down 42% the next day. So I think, when you look at PCs or smartphones, clearly PC demand benefited from, my kids being stuck at home and having to buy stuff to get them online, or iPads or iPhones, et cetera. And so you saw massive surges in demand for all of those products. And I think this year coming up, I plan on going on vacation next Christmas. I mean, we canceled our plans, but you're going to see a lot of spending move from things, smartphones, iPads, big screen TVs, which we also bought, to going on vacation, eating out at restaurants, going to concerts. And I think that's bad for that space.